We have earnings as well from Seven & I. What can we expect?
Yeah, not just earnings, but we're going to get CEO Ryuichi Isaka speaking for the first time publicly since news of this Couche-Tard interest came out in August. And, you know, between then and now, we've seen this sort of long period of news trickling out. We, of course, have the indicated price coming out from Couche-Tard both last month and then, of course, as recently as this week. And then on top of that, you know, we've seen news trickling out about a potential restructuring. So as if that weren't enough, the other thing to watch out for with Seven & I earnings today is the possibility of some sort of downward revision to their outlook. Analysts are already expecting a level below what the company has already forecast. And then also just their recent performance. Convenience store sales in Japan and the U.S. have not been doing well. So it's against this sort of very mixed backdrop. You know, performance at the business, this interest by an outside buyer, and then which has also spurred all this talk of restructuring. So it's going to be a pretty full day.
And really, Zuhair, with that backdrop of those unsolicited offers perhaps in Japan becoming more common, is just Seven & I an indication of what's to come?
Yes, I think this is absolutely the beginning of a trend. There are three things that make Japanese companies particularly vulnerable to takeovers. The first is that they have very cash-rich balance sheets and low valuations, especially when you look at EV/EBITDA. So it's very easy to finance the acquisition of Japanese companies through debt because they don't have any debt. So you can just borrow the money to take them over and use their own cash to buy them out. The second thing is, and this is very true of the Seven & I case, Seven & I has multiple unprofitable, low-margin business lines. And if you just exit those business lines, you add value to the company. Now, finally, Seven & I is starting to do the things that they should have done years ago. Investors were telling them to do this years ago, focus on their convenience store business. They wouldn't do it themselves. And it takes an acquirer, Couche-Tard, to come in and say, okay, we'll do it if you don't. So I think, you see that with all the Japanese companies.
Yeah, and I mean, take a look at the environment. We've talked about this many times before. I mean, there's a reason why Couche-Tard is interested in Seven & I in terms of corporate governance, and of course the change in corporate governance we've seen in Japan, as well as changes to the foreign exchange code, et cetera. I mean, tell us a bit about how the environment has brought us here.
Yeah, so I think in this particular case, the most important thing is the change in the fair mergers and acquisition guidelines coming out from METI last year, which means that company management can't just sort of, off the hand dismiss an unsolicited takeover bid. It actually has to go through a process where neutral, independent people review the bid and decide whether it makes sense or not, whether the valuation is reasonable or not. So that's one thing. And then before that, there's the overall long-term development of the corporate governance code in Japan, companies having to bring in these outside independent directors who may have a very different view from management, right? And then the final thing is last year, the Tokyo Stock Exchange focused on companies with low price-to-book multiples. And again, here, Seven & I is again an example of that, and then created by its own inefficiencies and poor management of things outside the convenience store business.
We're seeing more of these Japanese firms with these low margin, low value companies.
Yes, I mean, I'll tell you, it's shocking, but we did an analysis of the top 100 companies in Japan, and we found only 34 of them didn't have low margin or loss-making business segments. And in fact, 25 of those top 100 companies had 2 or more low margin or loss-making business segments. But culturally in Japan, they're not willing to get out of that, because in Japan you still have this problem of the old retired CEOs and chairmen sitting as advisors. And these are their old divisions, these are their old pet projects. And current management can't go and restructure these businesses. And this is why it's taking these outsiders to come in and bring the change in Japan that the management won't or is unable to do themselves.
And the dynamic that's different this time, of course, is that a majority of Seven & I's board is in fact outside directors. So this is going to be a really interesting situation as we go forward. The other thing I do wonder about, and again, we're kind of staying with Seven & I here, is given the new price that we learned about yesterday, the shares are trading well below that. I mean, how hard is it going to be for management to justify not really taking this offer seriously?
So I think there are two aspects to this. The first is that actually the Couche-Tard offer is in dollars. And given the yen volatility and how weak the yen is today, for Japanese investors, given completion is going to be sometime, many months from now, and the yen may be much stronger, so what they receive in yen may not be as much. So I think that is impacting this as well. But then there's also the skepticism about whether this deal can actually go through, given Seven & I has now said that they're a nationally important company, etc. So there's a lot of skepticism about whether the deal will go through and in what form it'll go through. But I think that doesn't sort of in any way reduce this trend of unsolicited bids. This is the first of many that are going to come.
Are they mostly going to come in specific sectors, for example, consumer staples or consumer discretionary? What areas in the Japanese market could we see more of that happening?
Anywhere and everywhere. I mean, this is, let's say, the sad reality of the Japanese market, that you have the same inefficiencies that you see in Seven & I across the board in corporate Japan. I mean, most Japanese companies are inefficient conglomerates. They have inefficient balance sheets. And it's very easy to finance a takeover.
Do you find a little bit of a discrepancy when it comes to the government really trying to liberalize the market, trying to give this reform a push, but at the same time designating them core businesses, which supposedly, according to the finance minister, shouldn't make it more difficult for an acquisition? But, I mean, does that send mixed messages, though?
It does to an extent, and I think here what we can see is that there isn't an absolute clear consensus within Japan on this, right? But I think the trend is clear. I think Japan is rediscovering its sort of capitalist mindset and roots. I think it's moving back to much more of a free market capitalism. And then especially when you're talking about, acquirers, whether it's from the US, Europe, Canada, these are allies. And I don't think that the national defense point really makes sense.
And in any case, I mean, it just really looks like the train has left the station. It's not coming back, is it? It's
not coming back. I mean, I think this is just going to get stronger and stronger. If you look at Japanese boards, they're becoming more independent. Japanese management is now more aligned with shareholders in terms of the way they're compensated and in terms of stock. So if you look at Japanese management who, let's say, 5 or 10 years ago started paying themselves in shares, those that have actually managed to raise the share price by doing the restructuring, a good example would be Hitachi. Hitachi board members 7-8 years ago owned $1 million or $2 million of their own shares. Well, those shares today are worth $10 million.
So are we going to see more like Seven & I's in the coming months and years?
Absolutely. Yeah. I think the cat is out of the bag. Yeah. This is going to be one of the most dynamic markets for acquisitions in the world.